Dear viewers, today we will discuss very important topic, difference between profit and interest. Profit and interest are two distinct economic concepts with different definitions and purposes. Profit is the difference between a firm's total revenue and its total cost, mean TR minus TC, including both explicit cost such as raw materials and labor and implicit cost such as the opportunity cost of using the owner's time and resources in the business. Profit represents the financial reward for taking on the risk of running a business. Interest, on the other hand, is the fee charged by a lender to a borrowed for the use of money. It represents the opportunity cost of lending money, as the lender could have invested the money is alternative opportunities. Interest is the function of the supply and demand for credit and is influenced by factors such as the risk of default, the rate of inflation, and the overall level of economic activity. In summary, profit represents the reward for taking on the risk of running a business, while interest represents the cost of borrowing money. Both profit and interest play important roles in the functioning of markets and the allocation of resources.